Ladies and gentlemen, I don't need these. Boys and girls, cats and kittens, welcome back to the dark side of the podcast. And thank you. We're going to continue to explore a little bit here today, and I hope you guys can indulge me just a little bit because we're diving into a fascinating topic that ties economics and cryptocurrency together, and it is called the velocity of money. Now, if you've ever wondered how fast money moves through the economy or how crypto like Bitcoin might shake things up, do me a favor. I don't want to do this, but it says that I have to do this. Do me a favor and smash that like button and go ahead and subscribe and all that other good stuff because this video is for you. Stick around. So, what exactly is the velocity of money? In simple terms, it's how quickly money changes hands in an economy. Imagine that you buy a coffee for $5. The barista takes that $5 and spends it on lunch. The restaurant owner then uses it to pay a supplier. That's the velocity of money moving from person to person, fueling economic activity. Now, economists measure it as the ratio of GDP to the money supply. High velocity means money's zipping around. Low velocity means it's sitting still, like in savings accounts or under mattresses. Now, why should you care? That seems to be the big question here. Well, velocity tells us how healthy an economy is. When people spend fast, businesses thrive, jobs grow, and the economy hums along. But when velocity slows, like during a recession, money gets hoarded, spending drops, and things stagnate. Think of it like the heartbeat of an economy. Too slow, and we're in trouble. Historically, velocity in the U.S. peaked in the late 90s, but it's been trending down since the 2008 financial crisis. It's crazy, right? So where does cryptocurrency fit in? Bitcoin, Ethereum, and the myriad of others that were born out of distrust in traditional systems like the banks and fiat currencies. Crypto promises a decentralized alternative. But here's the kicker. Its velocity is a bit of a wild card. Traditional money velocity is influenced by interest rates, inflation, and central banks. Crypto, it's driven by user behavior, driven by adoption, and whether people treat it as a currency or an investment. Now, let's break it down just a little bit here. If you use Bitcoin to buy a pizza or to tip a streamer, that's velocity in action. Crypto moving through the system. But here's the thing. A lot of people simply don't spend their crypto. This is a problem. They hold on for dear life, treating it like digital gold. Data shows Bitcoin's velocity is actually pretty low compared to dollars. Why? Because many see it as a store of value, not a spending tool. In 2003, for example, Bitcoin transactions were mostly trading and investing, not everyday purchases. But could that change? This is a very, very important question. It could. Absolutely, it could. Imagine more businesses accepting crypto payments like Tesla did briefly, and I think they're doing again, I'm not real sure, with Bitcoin. Or stable coins like USDC, making transactions smoother. Lower fees and faster networks like Ethereum's upgrade or Lightning Network for Bitcoin. Those could also help. Now, if crypto becomes easier to spend than to hoard, its velocity could absolutely skyrocket. And I want you to picture this. You pay for groceries with Ethereum. The store pays its suppliers. And boom, 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 it's moving like cash. Now, there's a flip side. High velocity in crypto could mean incredible volatility. If everyone starts spending Bitcoin at once, its price might swing wildly. Great for traders, not so much for stability. Plus, regulators might step in if crypto starts rivaling fiat currencies. This is something that is never, ever discussed. But let's not forget, crypto is still very, very young. The dollar's velocity benefits from centuries of trust and infrastructure. And they're still building that. So what's the takeaway here? The velocity of money shows us how alive an economy is, and cryptocurrency could redefine it. If crypto evolves into a true medium of exchange, not just a speculative asset, it might speed up money. It might speed up the flow in ways that we never even seen or considered. But for now, its velocity lags behind traditional cash, stuck between holders and hesitant adopters. The future, it's up to us. It's how we use it. It's how we spend it. It's how we save it. And that's just something that consider. Just consider. I'd love to know what you guys think about these things. I'm a little bit new over here to the evergreen side of things. Usually I'm just day in and day out. This is what I see. This is what I'm doing. But it just seems like we really, really seriously need to get back to some basic education on this stuff because it's lacking. The existing Coles out there have completely taken over everything, taken over their narrative. There's still the guys telling you about the 10x, 50x, 100x, and all of that is simply not going to happen out in the world, the crypto world in which we exist now. So I think it's very, very important that people understand some of the base fundamentals of this. Psychic money and velocity of money happen to be the very, very base fundamentals of all of this stuff. And it is definitely something that you need in your trader's arsenal if you're going to come over here and start navigating this space successfully. So that's it, man. Look, got any comments? Leave them alone. Hit the like button. I'd certainly appreciate it. We haven't had a subscriber in about 3 months. So if anybody clicks that button, you'll be the very first. And I'll give you a round of applause right now. But yeah, questions, comments, concerns, observations, right down there, scott@thepodcast.com. And I'm happy to talk about anything that you'd like to talk about. So until next time, please stay safe and please be smart with your money, guys. We'll see you.